Good weekend all. I'm Epstein, and here we are with your metal market wrap-up, your weekend edition, and this is for Saturday the 14th of December. So we'll just look at the weekly charts. Suffice to say, the metal markets got hit very hard this week. They got hit on Friday again. But what's happened here is China was a huge disappointment. And what happened is they went into their two-day meeting, and this is where they set what they're going to do. Admittedly, they normally don't tell you until March the plan, but they leak the plan out very conveniently through state media. So one of the things they've done is they've said, well, we're going to stay with the 5% goal of growth. Okay, but in order to do it, how? And we're not seeing the how. We're seeing a spiral continue in real estate. We're seeing a stock market that was hoping for the stimulus and took off. Is it going to start giving that up? And we are seeing their currency get hit and the Trump tariffs now 4 weeks away, roughly. So what will happen? Well, I think part of what they're going to do is allow their currency to drop out of the current band, which they've peaked recently around 7.2 to the dollar. I think they're going to go to 7.5. And another thing they're going to do, well, the tit for tat has begun already. You do something, we'll do something. But how much can they do? They're in much weaker position at the current time than the United States is. So the best thing they can do is abandon their ways. Will they? I doubt it. But that would be the ideal thing. And avoid the tariffs and let the world come together and have free trade. The word is free trade and fair trade. I think it's called a dream. When we look at the gold market, you can see how you came up and you fell back right here. So for the week, let me do this better for the month, because this is the monthly chart on a closing basis. You're down 0.4% or $1. When you look at the weekly chart, you are actually up nearly 2/3 of a percentage point and up $17, even though you gave a lot up on Friday. When we look at the weekly chart, I think you can look at the spike here, the break there, and you're caught right in this. Okay, but when I put on my swing line, I have a pattern that's sort of interesting too. I do have higher lows and higher highs. So until the market takes this out, last week's low, you want to be what? Defensive. If it takes out last week's low, then where's the market go? And why am I targeting that? Because last week's low at 26.17.5, the 18-week average is 26.28 roughly. That's where the support is. Take that out and you open the door up for the lower Bollinger Band. Doesn't have to go there, but you open the door for it. Right now, the bulls are trying to defend their bullish position, as I think, right here, not allowing the market to get much away from the 26.18 level, let's call that. Momentum has been correcting, so that's a good part of it. So you have momentum pushing down. You have the market fighting a battle here to stay over the 18-week, and it can tip very easily, and you want to be careful of that. In the gold-silver ratio, you can see how the market came back and is fighting on a weekly basis at the 18-day average. Gold is stronger than silver. As long as it stays over it and the numbers are climbing, you need more ounces of silver to get an ounce of gold. When I look at the silver market, I don't have the same pattern as in gold. First of all, you have been fighting for almost a month and a half, right at that 18-week average, not getting away from it at all. I don't see a trend in the market whatsoever, and I don't see a breakout point either. I don't see much of anything there. The copper market had what we call a bear market rally. The bias has been down as long as you were under the 18-week average. As we broke back here 5 weeks ago, I was saying that's a big important zone for the market. Go back, the videos are there, and I said that's probably where the pros are doing some short covering. Maybe you can get down here, but generally the first test of averages you haven't hit in quite a while. Remember, this is a weekly chart. Hitting these averages in September and then coming back for them mid-November and so on, that's often a support zone. I didn't say it's a buy zone. It's a support zone, and if one were short, that might be where some short covering went on. Well, you did rally finally. It took time and got up this week to the 18-week average of closes, and you ran out of momentum. And that's showing right here. Even though you were up a quarter point, you're at the very lows of the week. You lost momentum there, and when you reopen, it's not going to be pretty if the market's down. And I'm talking Monday. In the platinum, you might be going for the lower Bollinger Band. You're caught in this sideways action. You're really not trending at all in this market. You're zipping around. It's not even, in my opinion, a good trading vehicle right now. You're oversold. It's making you either buy when it's really overbought and sell when it's oversold, but it's not trend trading. You're trying to catch the turn in the market. Not a pretty place to be. Last in the dollar, the trend remains to the upside. You are overbought. The market has to prove it can stay here. Obviously, the market's going to be volatile as can be going into the FOMC, and then it's what we see. On this week, we're going to get the dot plot. Very important because it gives us the 3-month outlook as to what different members are thinking at this point in time going out through 2025. How many cuts? When do they come in? Blah, blah, blah. So we get to get all that. Then we see the Bank of England, Bank of Japan. So there's a lot going on because all of that does affect what the dollar does. So if you want to keep up with that, some of the ways are through our research. By the way, these are the reports you're going to get on Monday morning. I don't think I showed them. The Empire State Manufacturing Survey, that's expected out, and you're going to get the release of the preliminary December manufacturing service sector PMIs. The prelim numbers are always important, and you can see where they're at right here if you take a look. But what I was saying is if you'd like to keep up with us, one of the ways you can do it is through our free offers. The different market letters that we put out. There's the Linn research. All you do is select what you'd want on this page at iraepstein.com free offers. Just look at the top left. You can't miss it. And it's the different guides that we have, the different free courses that we have, ideas on trading that we put together. Then you put in your name, your email address, and you hit send. And there's a comment there if you have anything you want to tell us. We look at it. We will get it out to you this week, and it's that simple. As I said, it's an important bank week. Buckle in. I'm Ira Epstein, and I'll catch up with you Monday morning. Take care now.